Thank you so much for joining us. I'm Marlon Bowling, your tour guide to the ag commodities. I'm joined by Brian Hoops. He's the president of Midwest Market Solutions. He's based in Springfield, Missouri. All right, Brian, I want to take a look at the overnight trade here and get your thoughts on the fallout after we had the USDA reports yesterday. So let's review. Let's go to the corn. And on the overnight trade here, a little bit higher. We came in for a landing with September corn 5 higher this morning, 633 3/4. December 2 1/4 higher this morning. On the soybean trade, with our quotes provided by bar chart, a little pressure overnight. August down 12.5 at 15.48, and November down 18 1/4 cents. How about wheat? Well, in Chicago, you had September wheat 7.5 higher at 891.5, and it actually bounced back a little bit. In Kansas City wheat, we had September 4 1/4 higher, 956. And on Minneapolis wheat overnight, September actually finished 4 3/4 higher at 994 3/4. So how do you rate the performance of the grains after the reports came out?
Yeah, Marlon, good morning. It was a real ugly day for most of these markets. Wheat plunging to some new lows, corn market making new lows. The only real good thing you can say is on the continuation chart, we went and filled a gap on the December corn contract, but we're still searching for some sort of a summer low. And I think, by next Tuesday, we'll have our answer if it's been in place or not. Some of these weather models that we watch are turning a little bit drier for next week. And so if that trend continues, we could come in Tuesday morning and be ready for maybe even stronger trade than what we're seeing right now. So certainly going to be a very interesting weekend. It's a 3-day weekend, a true 3-day weekend, because once we close at regular time today, there's no trade Saturday, Sunday, or Monday. It begins Tuesday morning at 8:30 for both grains and livestock. And so a lot of things can change. I think that's going to give us some real choppy type trade today as we go into the weekend, with very few people really wanting to take on a big position ahead of a real long 3-day weekend. They'd rather wait for some of that fundamental news to change with weather models and such over the weekend and see how much rain actually did fall. So we could see, just like I said, a real choppy type market action. There's a census crush report out today. It's expected to be bullish, with the big crush numbers record large for this last month. That is certainly a friendly thing that the trade will be watching. But you start plugging in yields off of the balance sheets that were updated yesterday, new acreage numbers, new quarterly stocks. It changes our balance sheets around, and right now we're probably looking at like a 1.45 to 1.5 billion bushel carryover for corn. And soybeans, it's a really tight number, probably with that 145, maybe 150 million bushel carryout for this new crop, and that's using these record yields that the USDA currently has. So it would not take much of a weather threat in July and August, especially for soybeans, to ignite a big rally in these markets. You just have to have that stretch of hot, dry weather. Maybe it begins on Tuesday and goes next week, because the forecast is for very warm temperatures.
And if you happen to be paying attention earlier, Tim Ross was just talking about that in the Central Corn Belt as we get into next week. And typically, there's always this tendency for the markets to change course after the 4th of July weekend. Isn't that interesting how that happens so many times? We'll see if it holds true this year or not. Brian, we'll take a break right here. We'll come back and we'll talk about the livestock trade now and after the 4th of July when we come back. All right, we're talking with Brian Hoops of Midwest Market Solutions. Brian, I put together what we call a livestock summary. And if we could take a look at that, we had a little bit of cash market activity yesterday out in the plains. But I want to get your take on what we're looking at, because I had seen prices on the wire anywhere from, oh my gosh, down to 137 on the lower end for cash cattle, all the way up to 145, and that seems to be an extreme range. We were talking during the break before we came on live, and you said you might be able to even outdo that. What have you been hearing?
Yeah, there's some very few cattle, but very high quality cattle in Iowa, Nebraska trading up in the 150 to 151 range. So there's
Really?
a huge disparity between the southern trade and what we're seeing in the northern trade. And reasons we're given is, there's some cash being bought in the southern plains and being killed up north. So they're factoring in trucking and a little weight loss in getting them up north, but just better quality cattle from what we're hearing as well in Nebraska. And that's why they're being paid a little bit more of a premium. So there's a huge disparity, especially with August holding a big discount right now to that current cash market. So cash we're hearing for next week, expected to be stronger as we come back from a holiday shortened kill week and start to buy for the next week, and that'll be a full kill week. Packers seemingly need the cattle. They've been very aggressive in their slaughter pace. Steer weights were steady with the previous week, steady with a year ago. So all that points to positive fundamentals for the cattle market. There's also strong seasonals for live cattle, feeder cattle. Technicals are starting to actually improve a little bit. A lot of moving average traders will point to a 21-day crossing above the 50-day as a bullish sign, and that's happening in the feeders and starting to happen in some of the live cattle as well.
Now that's interesting, and that's considering diesel fuel at what, $5.60 a gallon or something, and hauling cattle several hundred miles. Okay, well, that's intriguing. I'm glad you explained that one. Let's take a look at how we closed here yesterday. On the August live cattle yesterday, well, we were 40 higher at 132.57. October by itself was down 12 cents. All the other months were, we'll call it about 20 to 57 higher. And if you look at the feeder cattle market yesterday, when we headed to the closing bell, you had the August contract $2.87 higher at 173.60. And September was up $2.45 yesterday. So all the contracts finished over $2 higher after the corn market fell out of bed. And on the lean hogs, you had the August contract down $1.47 at 102.10. October down 2.05. And want to take a stab at opening calls or penny calls this morning?
Yeah, I think you're looking at just a little bit higher calls here in the cattle market. You look at the bid ask, they should be a little firmer. I think the hogs probably open, 10 to 30 lower, somewhere in that range on follow through type selling in that hog market.
Appreciate the comments this morning, Brian. Thanks for helping us kick off a Friday, and I hope you have a terrific holiday weekend. Brian Hoops of Midwest Market Solutions. And Janet, that's the setup for today's trade. Could be an interesting one as we start a brand new quarter and a new half of the year.